UNG invests in the front month future contract. The front month future is exposed to the most extreme price moves up and down, just because it's nearest to the spot contract, whereas contracts further out on the futures curve tend to move a little less when there's a big shock, positive or negative, to natural gas prices. UNL owns the entire, the first 12 months in the futures strip, so it tends to potentially mitigate some of that volatility. But more importantly, natural gas tends to be a commodity that is in what's called contango, and that creates something you may have heard of called a negative roll yield. That can just be a headwind against your returns. So UNL, when that condition is in place, can mitigate that potential negative roll yield. Doesn't guarantee a positive return. And being in the front month, even in a state of contango, doesn't mean you're going to have a negative return. But that is kind of a persistent thing in natural gas markets. So UNL is designed to try to mitigate that somewhat. The outlook for natural gas, that's an interesting one because we have started to import considerably more liquid natural gas than we have in the past. But at the moment, it is still very much a U.S. commodity. There are overseas contracts, but in UNG and UNL, we are buying the U.S. contract. And so it's very much driven by U.S. supply and demand. That means weather, events like Gulf Coast hurricanes that take supply offline or interrupt shipping of liquid natural gas can really impact the market. So it's really driven by domestic production. We are running below the highs over the last 5 years that we hit last year, but we're above the 5 years average. So right now, natural gas started off the year great. It was up over 40%. It's now down over 20% year to date. That has a lot to do with weather and just the amount of natural gas in storage. But over the long term, again, as you mentioned, it's very vital. So I think that's a product that if investors are looking at it, that's where you want to have probably a shorter term view, use that as a tactical tool as opposed to necessarily something you just buy and hold. And if you did want a longer period and the market's in contango, UNL is probably going to mitigate some of those headwinds that you face when contango's in place.